let's talk about being an employee versus an independent contractor. At the end of the day, when you're an employee, let's say you work for a hospital or for a DSO, at the end of the year, you're going to get a W-2 form. All of us have seen a W-2 form at some point or another. And what happens is with every paycheck you receive, the taxes come right out of your paycheck. Unfortunately, when you're a W-2 employee, what you could deduct from a professional point of view, even on a personal point of view, is very, very limited. It's called Schedule A, where you itemize your deductions. None of your business or professional expenses are going to be tax deductible as a W-2 employee, and your hands are pretty tied. You can still do some meaningful planning, but the power you have when you're an independent contractor, the flexibility you have is tremendous, and literally the laws and the rules of the game when you're a private practice for yourself, whether you're an S Corp, C Corp, partnership, or independent contractor or LLC, the rules of the game are dramatically better when you're self-employed. So one of the main reasons I think each of you should consider going to private practice is the fact that you're going to have the flexibility to do that. If you're an independent contractor, you get a 1099 form at the end of the year. Whether it's from an insurance company or from various dental offices you work for, you'll get a 1099 form. Then you're responsible for paying your own taxes. As a Schedule C filer, sole proprietorship, or any entity form, you get to deduct a lot of items, and my son's going to go through a lot of that with you throughout this lecture. He's going to open your eyes up to various things that are going to be deductible. So there's a long list of deductions, and there's also things that are non-deductible. So for example, I'll give you a couple examples of non-deductible items. Let's say you're running late to the office and your office is in Brooklyn, there's no parking spot. You decide to park at a fire hydrant. At the end of the day, you leave the office. You got lucky they didn't tow you away, but you got a parking ticket. Is that tax deductible? No. So if you're doing something illegal, something that the government doesn't like you doing, they're not going to give you a tax deduction for it. I think perhaps the best example the best story I like to give in that area is probably about 15 years ago, I was going through records of an accountant, not an accountant, of a dental practice. One of the accountants came in to discuss it with me, said, John, this particular dentist is writing off this piece of jewelry. It looks like he spent about $15,000 on that piece of jewelry. I said, well, that clearly isn't deductible. So I called the dentist, let's call him Dr. Smith, and basically he said, John, in my practice, it's very important to me that I see every patient exactly on time. Can't be late. It's just one of my golden rules. So for that reason, I went out and bought myself a gold Rolex watch because that's the most precise timekeeper of all. And I scratched my head, thought about it for a minute, not really a minute, probably for about a second. Sounded like a pretty good argument as to why he needed that Rolex, but being that he could have bought a $20 wall clock, that wouldn't go, right? Because that's being excessive. So sometimes in the world of owning your own practice, some people get a little carried away, like the example I just gave you. Then on the other extreme, you have people that are just way too conservative, and they say, John, I can't find the receipt. I spent $500 on something. I'm not comfortable. I'm not going to write it off. That's the other extreme. If you spent the money, it's legitimate, you always want to write it off. But I just want to share that quick story with you.